Hello and welcome to my open home. I'm Lisa Safford and I am your expert in property. Now tonight I wanted to talk to you about how to become buyer ready and get your finances in order. Now, if you're wanting to buy a first home this year, then you're in the right place because, one of the hardest steps is probably knowing where to start. Now, I've heard so many stories from clients who have come to me after searching and finding the home of their dreams, but then missing out on it because they simply were not ready. And, this can be heartbreaking. So that's where I want to step you through tonight, how you can become buyer ready. Without all that heartbreak, this should be the most exciting time of your life. It's also one of the largest financial commitments that you're ever going to make. So that's why it's really important that you understand the process, you understand your finances, so you can make better decisions and you can avoid some mistakes. So, you need to get your finances in order, but you also need to get your bank pre-approval, okay, before you start searching for a home. And, to do this, you need to make yourself as attractive as you can to the banks. Now, one question I get asked a lot is, what's better, going directly to a bank or going to a mortgage broker? And to be honest with you, there's no right or wrong. It's really specific to your needs and what your situation is. Now, I'll give you a perfect example of this. I had a client just recently, in fact, he came to me last year. He already had his pre-approval through a broker, and we found a home and we purchased it, and we did buy it subject to finance just to safeguard him so that he could get that formal approval from the bank. And it was taking a bit longer than it should have, and we needed to ask for an extension for the loan. And then, 3 weeks later, it actually got denied. So the finance wasn't approved. Now, as you can imagine, he was shattered. And, he came to me and, he just didn't know what to do. So I reached out to a broker who, I work with a lot. And, I put her in contact with him. They discussed the situation and she came back to us the next day and suggested that we go directly to his branch because of that relationship that he already had. Now, he was banking with NAB, and it just so happened that I have a contact in that lending area. So I contacted her, explained the situation, and look, long story short, within 3 days we had the approval of the loan. So a complete turnaround. It was a very unique situation, and in his case, it worked out perfectly for him. But just keep in mind that if you are going directly to a bank, you are limited to the products that they have available. Okay, so this particular situation was very unique, and it may not suit everybody, and it probably isn't going to be the same for two people in a row. But you've got to work out what's going to be right for you. Okay, so if the banks have got a product that suits your situation, but otherwise using a broker is a fantastic option because it opens up a lot of different opportunities, okay, and different terms of mortgages as well. Now, a good broker is going to sit down with you and work out and understand what your goals are and what you need out of the loan. All right, they're going to help work out how much you can borrow. They're going to find products and loans that suit your situation. They're going to apply for the loan on your behalf, and they're going to be with you right through to settlement. All right, so having that expert finance person by your side is worth its weight. It really is. They'll also apply for any grants or concessions that you may be eligible for and explain everything to you so you understand it. All right, now brokers get paid by the lenders. All right, so it's a free service. And you just need to check, because there are some lenders that they get just a standard fee regardless of the product that they recommend. There are some brokers that get paid a higher fee for certain products or certain loans. And then there are some brokers that actually charge a fee as well as getting the commission fee from the lenders. So just make sure that that's a question that you ask them, what lending products they've got access to, who they work with, and how they get paid, because that's a really important thing to work out. Before you go and see a broker, check that they have licensing, all right? And you can do this by going on the ASIC, the ASIC Professional Register website, And if they're on that, then they are licensed. So that's a no-brainer. You have to go there and check that they have got that licensing. Now, as a bonus tonight, I've actually prepared a quiz for you, and it's to see how financially ready you are to buy your first home. So I will put the link to that in the comments. If you have any trouble, just reach out and I'll flick it through to you. But yeah, look, it's just a little quiz to give you a good understanding of what you need to do to, be attractive to the banks and get that pre-approval. Now, if you've already got a deposit saved and that quiz shows you that you're financially savvy, then you are ready to go to a broker or go to a bank and get that pre-approval. Now, if you've already got your pre-approval, that's fantastic. This is more about people that just aren't sure about what they need to do to be in a position to buy a home. Okay, so now look, I get asked a lot of questions about this sort of, starting point, and you're welcome to send through your questions now if you'd like me to answer them. But some of them, I guess the regular questions that I think I need to answer, because you may not even know to ask them, are some that I've prepared earlier. So one of them is, how can you improve your credit score before going to a lender? So a credit score, lenders use that to work out what your borrowing power is, and it's important to have a good score so that you've got a little bit more, I guess, flexibility with the terms of the mortgage that you're going to be eligible for. So you can actually check your credit score yourself, and you can go to the free service, moneysmart.gov.au, have got a credit score facility there where you can check it yourself. And a way that you can improve it, if it's not looking that healthy, is you can start paying your bills on time. That's a good way of improving your credit score. You can reduce your debt, your current debt is another way, and check that in case there's any errors on your credit score, because this can happen, and if there is, then it's quite easy to get those fixed before you go to the broker or the bank to be able to do that. Another question that I'd like to sort of go through with you is, what should I do before I speak with a broker? So yeah, look, have some savings already. Like, there's no point in, I guess, you could go and have an initial discussion with a broker and they could put you on the right path, and they might say, look, this is what you need to do. Come back and see me in 3 months. But they will pretty much tell you what I'm going through tonight. Save, have regular savings in place. It's one thing to have a lump sum in your bank, but what the banks are looking for is that consistent saving. That you're proving to them that you can actually do, manage your money consistently. So generally speaking, you'll need to have saved between 5 to 20% of the value of the home that you want to buy. Now that's a pretty broad spectrum of 5 to 20%, and there's a lot of money difference between 5 and 20%, I know, but depending on your circumstances and depending on the type of property that you're buying and the type of loan that you'll be getting, and lenders, mortgage insurance, all that sort of thing, they're the sort of discussions you need to have with your mortgage broker to see what you can qualify for. Okay, do a monthly budget. So assess your income, your expenses, and try to put away and save as much as you can. Every extra dollar, believe it or not, can make a really significant difference if you're just doing that consistently. It's a good idea also to have a bit of an emergency fund, whether that be a month to 3 months worth of expenses, just in an emergency fund, like a bit of a holding account, just in case. Otherwise, there's always other options, say for example income protection insurance or things like that, just to safeguard you once you actually get a mortgage. You'd just like to have that financial security. Aim for a low debt to income ratio to give you better options. So what this is, your debt to income ratio, is you can divide your monthly debt payments by your gross monthly income, that's before tax, and that will give you your debt to income ratio. All right, and this is what the banks will work out to find out how much they're prepared to lend to you. Okay, that's your borrowing power. Another question that I often like to answer is, are there any financial surprises or expenses that catch first home buyers out? Well, yes, there are. And, you know, there's other expenses involved in buying a home. It's not just the purchase of the actual home. You've got your professional fees, which include your solicitor or conveyancer. They do all the settlement and all the due diligence of the Section 32 for you, that legal review. Your buyer's agent fees, if you're using a buyer's agent. Stamp duty, you know, if you're eligible for the stamp duty, concessions, and that's great. But, you know, if you're buying, depending on what state you're in, you know, if you're buying a property that goes over that threshold, then you will need to factor stamp duty in. You also have lender's mortgage insurance. Okay, so that's the insurance that the bank or the lender puts on the loan amount just to insure themselves against you defaulting on the loan. You've got your building inspection report costs, your home and contents insurances. You've got your connection of services like your electricity, your gas, your water. You've got your rates. You've got your moving costs and any maintenance. You know, you might move in and you know, there might be a little bit of maintenance that's needed. So you need to factor this in. It is something that you need to consider, particularly if you're buying your first home and have never done it before, because it can come as a rude shock. I know some people have bought their first home and they haven't had enough money to buy their first week of groceries. So they've, you know, had to, find other options. Another question is, why is it important to get pre-approval? Now, this is your first step of becoming buyer ready. And I know there are some people out there that don't necessarily think it's important. They think that, you know, they'll be right. They've been told that they'll be right. They don't need that pre-approval. It puts you in a situation where you'll be able to buy with a lot more confidence, knowing that that's how much the banks have approved you for, and you've got that in writing. You know how much you can borrow based on your current lifestyle. And, you know, the funny thing is with that, you know, you've got to remember that the banks are going to give you a pre-approval amount for the maximum amount they will lend you. You don't have to spend it all, okay? So you can work out how much you are prepared to pay for a home based on the lifestyle that you want to have, all right? And that's something that we can go through once we get to that stage. It also helps you understand, you know, how much you can bid up to and how much you can offer, because if you do find that home that is going to stretch you or make you actually, use the full amount, then it's just good to know what that upper limit or what that buffer is, okay? So look, that's pretty much covers most of the basic, I guess, becoming buyer ready key points. So thank you so much for joining me tonight. It's been a pleasure to be back for my open home, and I look forward to doing these more regularly with you. So keep an eye out. If you do want a copy of that quiz, please reach out, and I'd love to send it through to you, because it's really going to give you a good indication of, you know, how financially savvy you really are, and, you know, what you need to do to become financially savvy. It's a good little thing to have up your belt. Again, thank you so much for joining me tonight. It's been an absolute pleasure, and I look forward to seeing you in my next open home. Thank you.